Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell for Thursday, March 17th. Happy St. Patrick's Day, everyone. Let's see if we can get some luck of the Irish going and keep this rally headed in the right direction. It is 6:15 as I'm starting the video. And as always, please run your player at 1.5x. Looking at futures, we were flat for a long time. We just started a little slide down about 0.5%. Oil's been rallying this morning, up 5%. Gold and silver doing well, up 2% and 3% respectively. Copper's up 1%. So the commodity complex is bouncing back a little bit. On the macro front today, we've got jobless claims, Philly Fed, and industrial production. That industrial production number will be a closely watched one, as will jobless claims, but recently anyways, those jobless claims have really not moved the market. Before we get into the chart, let's just kind of go over where we're at. Chair Powell did all the right things, said all the right things yesterday, and convinced the market that everything's going to be fine. He's going to tame inflation. He's not going to crater the economy. He's not going to send us tail spinning into a recession. So far, so good. But now the rubber starts hitting the road, right? These post-FOMC rallies are notorious for being reversed. So if it's a rally, it'd be a fade. And if it was a fade, then they'd rally it. That first move is fake kind of thing. Now, we did have that rug pull yesterday afternoon, which they reversed, so we got to see if that sticks. My point in telling you this is there's absolutely nothing in the charts that would say, we've bottomed. That's kind of something you say in hindsight. We didn't make a lower low in most cases. In some cases, we went back and tagged that February low. But if you look at the price action, bear market rally has to be your base case right now, with the door open to become more than that. And I will tell you, like I said last night on the video about the individual sectors, we do have some bullish divergence in place, which is a big positive. So now we've got the big OPEX tomorrow, the March options expiration with $3 trillion rolling off, and then we roll into next week, and then I think that will be the deciding week. Why? Well, if we get say we get a little bit of a bounce here today and tomorrow, all that delta rolls off in March, and if everybody storms in and buys puts, either for protection or a directional bet for lower, then that wouldn't be so healthy and optimistic for the bounce to continue. If, however, there's enough of a bounce today and tomorrow to get some mini FOMO going, and then next week we don't see the massive hedging that we saw in early March, and they're buying calls, then that will be a positive development. So we got a lot of irons in the fire in terms of maybe this is going to happen, maybe that is going to happen, but I think the bounce from oversold conditions has merit. There are things in the chart that make this rally poised to be something more, but don't get out over your skis. In a lot of cases, we're still below the 50 and the 200. And so I will be looking on charts and individual stocks to see when and if those key moving averages can be recovered. So let's dive into the charts. Got a lot to do. VIX, we were above 30 I saw somewhere for 11 days. Now we broke below. We've got a little support layer here at 26, but as long as it stays below 30 now, I think the VIX will be constructive. I think the most important thing is just trying to identify trend during the day. Is it going up? Is it going down? Does it line up with what I'm seeing in equities? So for instance, you see stocks going up, and then you look over at the VIX and it's green. That's a yellow flag. The VIX should be falling when stocks are rising. And if people are laying into hedges, buying puts as stocks go up, that's not a great or inspiring thing to see. Okay, let's go through the indexes quickly. SPY daily. In the falling wedge, we broke out of that wedge yesterday. We moved in and filled this gap right here, as you see, and you can see price stopped on a dime at the 200 EMA in gold. Key moving average 436.42. 436.42. Call it right here, and then you got the 50 coming in right at 440. Those are going to be the two levels to watch today. Does it stall here at the 200, or can it get a little power and go up to the 50 EMA? And remember, it's not marked on this chart, but the gold line on the 2-hour chart corresponds to the 50 EMA on the daily chart. So you can see here where I mark this divergent double bottom with a 3% measured move. So that projects to a tag of 440 up at the 50. So that would, that's where the measured move target is. It remains to be seen if we can get there. But if we can, and even more importantly, if price can move above 440, take out the 50 EMA, then you got some real possibilities of extending the rally. And don't forget that we've got an open gap here that needs to get filled. So if price were able to accomplish that, you're up at 446. And so the levels for today are pretty clear. Now, I want to talk about something. In my mind, it's actually good that prices, here in the futures at 6:24 in the morning are red, because a slightly down open will give you a chance to get your ducks in a row and participate in any rally, in the morning session. So, for instance, let's look at the 30-minute chart here, be an easier place to look at it. Here's the gap, and then here's the gap above. Here's that 3% measured move. So we closed the day yesterday right on the 200, and so now we're down this morning. Say you got a pullback into 433-ish right in there at the bottom of this gap, and it holds. You could either try a long right there, or just alarm yesterday's close. And if you recapture a level from below, that's bullish. That's your buy alarm. That's your trigger. If we were to be, gap up this morning 2%, it's a whole different ball game. So think of this down open as an opportunity to be able to buy on a reclaim of overhead levels from yesterday. Qs, much different setup than SPY. Why? Well, we had the downtrend channel. That's pretty much the same. But here we've got the 50 below the 200. So I think we're right here at a pivot point at 340. If it can take out 340, I think you can come up to 347.50 at this higher volume over price bar. And then right above that, you've got the 50 EMA, you've got an open gap, and then you've got the 200. So, work to do on the upside, but if we can take out yesterday's close at 340, you do have some runway up towards 351 is where the 50 comes in. So, I mean, that's an $11 move if price can go up and tag the 50 today, and that would be a real nice move. Here it is on the 2-hour chart. You just got some resolution. Here's the top of that old trading range at 347.50 that we talked about, and then here's the 50 EMA coming in gold at 351. So if you can break in right here, get a quick move to 347, that would look real good. And especially here this morning, a little bit of a down open, you get a move back above 340, you can buy that with a stop just below, and then if the rally proceeds, you're going to be in and looking good towards the noon hour if we can get that move. So anyways, here on the 30-minute chart, you just got some resolution on the intermediate levels, 340, 342.50, and 347.50 look to be the most important levels this morning. IWM, nice day yesterday, over 3%, still inside the big box. I think on the upside, you see here that price is a little bit in no man's land. You've got a large volume over price bar here that really hasn't been taken out, and you've got the 50 and this downtrend line coming in right above that. I think if we go down to the 2-hour chart, you can see that there's a line of resistance here at 202, large volume over price bar, and then right here at let me get that level for you. $203.70 right here on the 50. So if there's a breakout above the first encounter of resistance is the 50, and then you've got a open gap above that needs to be filled, and then the super big, can't emphasize it enough, level is 210, and that corresponds to year-long support that we broke way back when. So if price were to recover that, that would be a monumental type move for the bulls. Here you just got the intermediate levels. I'm gonna move along here. If you're new to the channel, thank you so much for spending some time with me this morning. I put a lot of effort into giving traders good objective levels to trade against during the day, and I think if you stick with me a while, you'll gain confidence in the levels that I give you, and then that'll open up your bandwidth so you can focus 100% on execution, and that's really where you're going to get paid. There's a lot of technicians out there that can give you levels. The proof is in how well you can trade around those levels. That's the one thing I can't do for you. I can try and coach, I can give you hopefully good advice on what I think is going to happen. But of course, you've got to pull the trigger. So I will do the best I can to help you improve your trading, specifically on trading psychology and all the peripheral things that you can do to improve. If that appeals to you, please hit the subscribe button, the alarm bell. Feel free to give me a comment on a sector or stock that you'd like me to chart up. I would be happy to do that and include it on the next video or sometime soon. Jump over in the show notes. You'll find a link to the blog site where you can drop in your email address. Morning, noon, or night, when I send something out, you'll get it right in your email box and you won't have to hunt for it. And as a bonus, you'll get an invite to our trading room. We would love to have you come in and observe and be part of the team. So I hope to see you soon. So let's move on to FATMAAN quickly. Nice breakout. Stopped right on a dime on 204. So that was a great level. If you get a little opening pullback and then you break above 204 this morning, I think you can buy that and look for like 208.50. So that in and of itself, just going up to first resistance, is that would be a really nice trade. Apple, big gap to fill here, starting at 160.50. That we've run across that level before in the past, and we've got an open gap up to 163. So if we got a little pullback this morning below 159 and we got to move back up through 159, I would buy that and then hope for the best at the gap, right? If you see a lot of stuff rallying, you know, your other FATMAAN names, you see a lot of green on the board, and Apple gives you a little hesitation or dips down below 159 and then breaks back up above, buy that, and then with any luck, you'll get this breakout here at 160.50 that will carry you up to 163. Above 163 gets a lot tougher. You've got the downtrend line. You've got a line of resistance here at 163. If you did get it, that would be a very good sign for the Qs and the market overall to get this 60-minute breakout, and that would target up towards 165.50 as a first target up above. Tesla had a good day yesterday, up almost 5%. We're right at the downtrend line on the 60-minute chart. I've updated these moving averages from the daily chart. We've got the 200 coming in at 856. We've got the 50 coming in at 891. So this morning, if it can hold this 835, I think you've got a shot to get to 860. That is a really, I mean, that to me is the line. Why? Reject, reject, reject. Bunch of support, reject, more support. That's your main line. Your main go, no-go line on this chart is 860. If for some reason there's, you know, a gap above, or you can't get an entry down towards 840, make sure you have an alarm at 860, because if you get a break above there, I would take it and then look for a move up towards 880 and potentially up towards 905. So there's work to do between here and there, but this is the environment that if the rally is going to work, I think Tesla will do well. And with this key pivot here, if it turns out that the rally, in fact, you know, is something more than just a bear market rally, price should not come back below 860 here on Tesla. Might back test it, but should not break below, and that'll be a nice tell for us, along with Apple that I just showed you. Nice spot here on Microsoft. Big downtrend line on the 60-minute chart. We've got a clear level here, 294, largest volume over price bar on the chart. If you get a little dip below and then a break back above 294, I would buy that, and I'd be looking for something close to 300 on that move higher, and that would be a really, really nice trade. If you could get something close to 294, get long and let this thing lift towards 300, 301. It'll get tougher there, but you'll already have a nice trade in the bag if that pans out. Amazon, I mean, I have not adjusted these levels, and they just worked like a champ yesterday. You got the breakout of the downtrend line. We made a run up. We came back and back tested the trend line, and then moved higher up through this 30-30 level on up to where do we end? 30.62. What you ought to be doing this morning is alarming 30.75. You get a breakout there. I think you got a good chance at a run to 31.50 and potentially 3,200 if everybody goes nuts on it. So those are the key levels. And if you got a pullback to 30.30, I would buy that because you've got a line of support here. This is the important line on the chart. At least around here it is, because you had all this support here and it was rejected here. This was fake. Support, 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 breakout. It can come back to 30.30, but I wouldn't want to see it fall below, because then it can come back back below 3,000, and I wouldn't want to see that happen. Now, if you say, Chris, that's all well and good, but I really don't have 1,200 lying around to buy one Amazon call for tomorrow. So what should I do? You should go over to XLY, where XLY is 24% of that index, and try and play it indirectly on XLY. If you look in the sector video chart list, it should be number one on the board, the video that I did last night. Look at that. I detail all the levels for the important offensive sectors. Go in and alarm that, and that'll be an indirect way of participating with Amazon if you're just not comfortable with those really expensive options. So just an idea for you. Google, nice day. 3%. I had penciled in this 6% double bottom with bullish divergence. I've projected that 6% move gets us up towards 28.30. Long ways to go, but as you can see, it can move pretty fast. So today, I think you can be long against 26.60, and as we've discussed, if we open down a little bit and then recapture 26.60, I'd be a buyer there, because remember our TA tenants, we had a trading range here that was well defined, that ran from 26.60 up to 27.10, which is $50, which ain't all bad. And so if we somehow can dip below in the morning and then recapture it, your target will be the top of the box with the potential of getting a little resistance here right at the midpoint. You notice the large volume over price bar right there, but I would certainly be trying to get long at 2660 if you get the opportunity to get in somewhere close to that. Netflix at a key spot, 4%, big downtrend line. I think if you break above here, I mean, you can call that 358, 360, or you can just wait for 362.5. You break that, I think you got some room to run up towards 380. One point that I want to make, that I did make on the blog site, is in these types of rallies, quote, bear market rally, your junk is going to bounce higher than your quality. So you get a big move out of Apple, it's 3%. You get some of these Ponzi bubble names, they can be up 10%, today or whenever. And a lot of them were yesterday. So the beaten down names with a lot of short interest that have fallen the most, logically are going to bounce the most. And so don't be afraid to look for those Ponzi names if you want to get into, single stock kind of trades. And as we wrap up here on FATMAN, after I go through the semiconductors, we're going to take a look at the ARK complex, which put in some big bounces yesterday. So SMH, 60-minute chart, gap up, run up higher, FOMC sell-off for a back touch of that trend line, and then rocket right back up to this key level. And this is what I'm talking about, given objective levels, stopped on a dime. That wasn't a coincidence. Why? Because that's where this big important line comes across with all this, what was once support here becomes resistance here. And this is really the first time you can see that we've tested that level since breaking down in early March. We've put in that divergent low. See the positive divergence there? I wish I would have seen that earlier. That was a mistake on my part. But now a move above 262 targets 270 at the top of the box. And I think that would be, a nice outcome. That's $8. So as always, there's usually a little bit of resistance here in the middle, at the midpoint of the prior trading range. We had some bracket trades going on yesterday. I just want to point these out. I think these will qualify as, and I don't mean this disparagingly against DocuSign. I have no idea whether it's a great company, a fraud, a good company, but no way to get profitable. I know, let's see. Yeah, they got a PE of negative 140. So it's been punished, and punished badly. So, but now, 8.5% bounce. A lot of you got in this bracket trade, and this morning, I think you can use yesterday's close as a pivot point. So yesterday, 83.17. Let's just say 83.25. Little dip on the open. Take out the high, or take out the close of yesterday. It was the high. And then try and close this gap. And then from a technical standpoint, you've checked off that box. Gap opening, gap closed, then we reset up here. COUP software, same deal. Negative 17 PE. Punished. Big gap down. Recovered. A lot of you got long. Sitting here. You can put your pivot point at 80. You get an alarm that goes off at 80. Get long and try and get a gap fill up to 90. That would be a worthwhile trade. And if 10%, it's there. Just what it did yesterday. So don't think that we can't close this gap relatively quickly. Wrapping up with ARK real quick. We know it's been beaten down, but now look, 12% bounce yesterday. We're coming right up to this downtrend line on the 60-minute chart. I would, you can look at it a couple different ways. You can say, Chris, I want to buy that breakout there. If that's the case, you can buy 27, put an alarm at 27.50, or make price prove it and set yourself an alarm at 28.25, something like that, and then buy that, and then look for 29.50 and then 31 if it if the rally extends. And it's a little early to talk about it now. We don't know how long this rally is going to last. I mean, I'm viewing this, these bounces as free money on the other side. If the market rolls over again, and these are at much higher levels, I think they're going to come after them again. So, excuse me, I would be ready to reshort them down the road after this bounce plays out. Here on ARKG, I think this is going to have room up to 45.50, and then there'll be a moment of truth at this downtrend line. ARKK, you got a nice pivot here at 60. You get a break above 60. You can buy that and look for 64 here today or in the next day or so if the rally proceeds. And then above 65, I think you'd have some running room to 69. And then ARKW, the ARKWeb ETF, made some progress. We've got a downtrend line that is right upon us as we speak. I would alarm 80 for that breakout. Look for 82.50. And then if you can break that with the high volume overpriced resistance bar here, notice the big void just above. And then that would give you some running room up towards 87.50, 88 type area as price moves into that void. I think the key on these stocks this morning is before the open, set your sights on what you want to try for. If you were trading DocuSign and Coupa yesterday and you had success with that, fine tune your levels, set your alarm. You may already be long. If you're already long, then just leave it and see what happens. See if you can get that lottery ticket to pay. If you're not in it and you like that idea of trying for that gap fill, which I think is a good idea, then set your alarms and focus. Here's my point. Decide what you're going to focus on, whether it's the ETFs, the spider ETFs that I went over last night, whether it's the indexes, whether it's, Apple, the FATMAAN names or the ARK names or other names that you're really familiar with, because what can easily happen when things get moving fast is you get peppered with buy alarms, and you get discombobulated and you end up either not doing anything, or you are running around checking all these alarms. Meanwhile, the thing that you really wanted to buy starts moving away from an objective level. So in your pre-market setup, make sure you write down your plan. I'm buying Apple on a recapture of 159. Boom. You get that alarm, you go there, you buy it. Do that right on down the line, and keep in mind that the base case is bear market rally. So you don't want to get out there and put on 15 positions like it's the bottom of COVID or something. Like, these are just so cheap, I'm going to buy everything, I'm going to max this thing out. Don't do that. Think tactical, don't think strategic right now, because it's way too early for that kind of thinking, and we really haven't dropped that far. So I'm expecting this rally to peter out at a certain level. I don't think we're just like immediately going to new highs. If I'm wrong, I'm wrong, but I'd be happy to tell you that I'm wrong, but we're long everything. That's great. And what I'm saying is, today, I think the default position is we're going to watch it, but if our buy alarms trigger, buy it and see where the rally takes us. If it peters out or we get stopped out, we get stopped out. But I don't want you going out there, using all this buying power and trying to get long everything because, quote, the bottom is in. I don't think that's the case, and I don't want you to jump the gun. So let's see how it goes. I hope you got some useful content out of the video. So let's wrap it up here. I will talk to you certainly periodically through the day, either by a quick email note or a quick video if I see something special. So have a good day of trading. Make sure you're organized, ready to go, and I think you'll do really, really well. This has been Chris Buss with Traders Profit Compass. Talk to you next time.